But keeping in mind the positions here, for that drop to take place, we'd like to see shorts increase, but we're not seeing shorts increase. We're seeing them decrease. And instead, we're only seeing an increase in long positions, all right? How's it going? How's it going, ladies and gentlemen? It's Magic Trader here, and it is 2023. Let's take a look at what the big institutions have been doing with their positions. We're going to look at the data from December 27, 2022. And I know you're thinking, that's from last year. Is it going to be relevant? Heck yeah, it's relevant. All right. And we're going to show you just how relevant it is today. So grab a cup of coffee and let's get started. As we always do, we always look at gold first. And we've been tracking gold for quite some time now. And what we've been seeing lately is that price has been within a shorting cycle. That's why shorts have been very aggressive, all right? Very aggressive, and then they started to close off their shorts, reducing them down to about 92,000 right now, okay? Look at what has been happening over the last few weeks. You see that? 224, 226, 229, a steady increase here. A steady increase. Now, that doesn't mean that the banks are now going to start accumulating a massive long position. No, that's not what it means. But it is interesting. All right? It is interesting. And it's interesting for many reasons. Because we've been examining the markets, the dollar, the euro, and so forth, and there's some indications that there may be a move to the upside taking place here. May, okay? It's a slight chance, but it's there. So, let's take a look at the context of where price is. We have a massive area of supply that price is contacting right now, okay? What typically happens when price contacts a massive area of supply is we see price turnover. That's what typically happens. And that could still happen, all right? I'm not saying that it's not going to happen. But keeping in mind the positions here, for that drop to take place, we'd like to see shorts increase, but we're not seeing shorts increase. We're seeing them decrease. And instead, we're only seeing an increase in long positions, all right? And it's not like, we haven't been here long enough. We've been here long enough, okay? We've had 1, 2, 3 weekly candles here, okay? This is the 4th that we're in now, or the 5th we just started this week, okay? But we've been here for quite some time. They're not increasing shorts, so that's a pretty weird sign, all right? So just remain focused on that. Would I trade gold right now? The answer is no, I would not trade gold right now, okay? It's not tradable. For me to want to trade this, I'd need to see some significant upside from here or a push down, a strong push down. Now, I've detailed to members exactly what we need to be looking for. What exactly are the trade signals to enter into trades? And I'll leave that for members only, but I'm just giving you a brief idea of what I'm looking at here, what I'm seeing, and what the positions are telling me. Okay, so now let's get over to oil. All right, beautiful. With oil, we can see short positions have been decreasing. 97, 88, 77,000. Okay, very cooled off, as you could tell by the coloration of the cells. Very cooled off means they're not focused on shorts. Okay, what they have been focusing on for quite some time has been to remove their massive long exposure since last year, mid-year. Okay, and before that, since the beginning, just offloading longs. 422, now we're down to 325,000. But if you look at longs and shorts, you can see that they're both cooled off, but shorts are a lot more cooled off than longs. So there's still some interest in long positions as far as what the institutions are doing with their positions, but there's really no strong direction that we're getting off the charts here, okay? We may have some demand coming into play down here on the lower end, pushing price to the upside, but there's really nothing to indicate on the charts any type of sustained direction that we should be expecting price to move in. Okay, so for that reason, I don't focus much of my attention on oil. US dollar. This one is an interesting one. Okay, very interesting. First, let's start by taking a look at the positions held by the institutions. Okay, so what we can see is that lately they were aggressive with their long positions. And if you've been following us for some time, you'll know that we were taking, we recognized that they were going to take profits on long positions, okay? Massively long. They price ran into a massive supply area where we suspected they were going to take profits on their shorts, or sorry, on their longs. And now we see exactly that has taken place. Look at the reduction of positions from 44,000 now down to 33,000, okay? Look at the coloration of the cell. You'll notice that it's not red. Why? Because they're not aggressive with their positions. But if you take a look here, you can see shorts, the short column. Look at what's happening with their positions. They used to be blue, according to the cells, cooled off, now 12, 15, 16. What are they doing? Slowly focusing their attention on short positions. Short positions are going from cooled off to more aggressive. All right? Now let's look at the long and short percentage. And what we can see is a little bit of green here. Okay, they were bullish, which matches the positions. But now the coloration of the cells are turning blue. All right. Now, when they are blue, that means neutral. That typically means we don't want to be focusing our attention on trading something when the sentiment is neutral. When the sentiment is neutral, it means, you know, hold off, sit on the sidelines, and just wait until something more clear takes place. Okay. So when we look at the dollar, we see here is that institutional supply area that we had drawn on the charts. And it was when this area was contacted that we suspected price was likely going to be dropping. All right. And so that is the drop that we noticed, okay, on the charts over the last many weeks. So what to do now? Well, like I said, sentiment is neutral. This is not the time to be trading the dollar. It's best to just sit on the sidelines and wait for it to play out and wait for there to be something a little bit more solid to base our trading decisions off of. Okay? All right, Aussie. This one's a nice one. Remember, it's been in a shorting phase for a long time. And so this shorting phase is still in play. Okay, if we look at positions here, we can see that shorts are still aggressive. Shorts have been the main driving factor of the Aussie for a long time now. We've been talking about this for quite some time. And if you look at longs, they're still cooled off. Look at the cells. The cells on the longs are cooled off. They're blue, meaning they're not focused on long positions right now. But, and there is a but here, okay? I will bring your attention here to the weekly chart. And what I will show you is that we are contacting an institutional selling area here. Okay? Institutional selling area, which means that when this price is contacted, we would suspect to see a push to the downside. All right? But this type of price action that we're seeing here recently, this is not what typically is presented on the charts when price is about to drop. Okay? It could still drop, but this is not typical. And when I see price action that's not typical of what we suspect will happen, then it makes me wonder what is actually going to take place. So for that reason, I wouldn't want to trade the Aussie as well. Okay. When you look at the retail sentiment, you can see that they're mostly long right now, which is interesting. Okay. Very interesting, because just last week they were short. So I don't know what made them switch, but something made them switch. Maybe this price action is confusing retail traders and getting them to go in long. That's actually a good sign, because, you know, we have been for some time now expecting there to be a drop from these areas. But with retail traders being mostly short, you know, it wasn't in line with our expectations. So now we're seeing the Aussie retail traders are mostly long, which is a good sign for a drop to come. So keep your eye on that one. Okay, USCAD. All right, so we take a look at positions and we can see that on the short side, they just recently reduced their shorts from 39,000 to 28,000, cooled off. But they also reduced their long 66,000 to 58,000. Okay, bottom line is if we look at long positions, you can see that they're more aggressive than they are with the shorts. Okay, shorts are cooled off, longs are aggressive. But what else do we see? Okay, what else do we see? You see that? Look for how many months the sentiment has been neutral. Okay, it's been neutral. It's been neutral even though net positions have been positive. Okay, that's the power of the spreadsheet. The spreadsheet contains a lot of power in showing you the dynamic of what is in play, relating it to the positions of the institutions. All right, so we can see net positions are positive, but longs and short sentiment somewhat neutral. So that means don't be so overly excited about trading this. Yes, there's a little tinge here of green, okay, a little tinge, but that's not enough to get me excited, okay, especially when they're reducing their longs from 66,000 to 58,000. There's nothing clear on the charts here, so for that reason, I would skip it and move on to something else. US Swiss franc, same, it's down into demand. Look at longs, look at shorts, both cooled off, nothing here. Retail sentiment on this one is mostly bullish, okay? Mostly bullish. Interesting, okay? Because demand is in play, retail sentiment is mostly bullish. They're not focused on any position here, long or short. They're both cooled off. You know, could it go up? Could it go down? Hard to say. So I wouldn't be betting on any direction with this one. Euro. Here's the interesting one. Okay. This is the interesting one. And I'll tell you why. Because when we look at the positions here, and I look at how aggressive they are with their positions, one thing I notice is just how red they are with their positions here. Super, super red. You know what that tells me? That eventually they're going to have to take profits on those positions. You know what's going to happen when they start taking profits on long positions? It's going to fuel a move to the downside. And when you look at retail sentiment right now, they're mostly long. So who do you think they're offloading their long positions to? They're probably doing it right now. Okay? Because remember, this data was reported, it came out on Friday, but it was reported last week on Tuesday. So they had Wednesday, Thursday, Friday, okay, to offload. So I wouldn't be surprised if next week's data, this week's data is going to show that these long positions are reduced. Okay, so keep your eye on that. Keep your eye on that. So with that being said, retail sentiment, like we said, they're mostly long, which is a good sign, because if I was going to trade this, it would be short. Okay, why? Because the fact that they are already situated with such a strong long position that they're going to have to take profits on that position at some point. Okay, and not just that, but we are sitting within a massive selling area. Okay, right here, this is a massive selling area. And what typically happens when price is in the selling area? Price usually drops. That's what typically happens. Okay, so that is what I'm going to be keeping my eye on with respect to the euro. Pound, interesting one. So pound, we see an increase in longs from 35,000 to 40,000. Oopsies, here we go. Sorry about that. We see an increase in longs from 35,000 to 40,000. Now, contract expirations, what did they do? Something really interesting. They dropped them. They dropped them from 57 to 40,000, but then after contracts expired, 51,000. So basically the move is they went from 57,000 to 51,000. So they're reducing their shorts while increasing their longs. Now, you can see the coloration here on the 40,000. It's not as blue as here. It's more white. That's a good sign. That means they're slowly exiting out of cooled off territory. Now, there's just one cell of whiteness, so it doesn't really mean to me that they're going to be, sustaining this move. But it's something to keep an eye on. In terms of the situation that we're currently in right now, we see some selling here by the banks taking place at these highs. All right. But we also have an institutional buying area here. So for any sustained move to the downside, this area would need to be taken out, and then we could see a sustained move to the downside. Okay. But remember where we are with the euro. Okay. They need to take profits on their longs. And if they take profits on their longs, which pushes price to the downside, the dollar is going to go up. This is going to be affected. And we're likely going to see a push to the downside on it. Okay. And I should say that the pound, most of retail traders are long right now. Interesting. Very, very interesting. Okay, so US dollar, Japanese yen. So in terms of their positions, remember back here when they were aggressive with their longs? You remember that? Remember what I said? Go back and take a look. Okay, this was back in October when prices were reaching, when positions were reaching highs and price was contacting an institutional supply area. What did I say? Most likely they're going to start taking profits on their long positions, which is going to fuel a move to the downside. And look what happened. It's like predicting price action before it actually takes place. Okay? You know what they say you can't do? They say it's impossible to do. Well, we do it. Okay? Look, from the exact area. Okay? Look what I have written here. Important supply. This is the important supply. It came into play. And look what happened with price. Profit taking on those long positions, which fueled a move to the downside. Exactly as we had suspected. Okay. So look at short positions now. Short positions are cooled off. They're not focused on short positions. They're not focused on short positions. They're not focused on long positions. So what does that tell you? Do you think you should be trading it right now? Is that what you think? Would you want to do that with the sentiment being neutral? Look at the coloration of the cells here. Under long and short exposure. Neutral. That means don't trade. Profit taking has been taking place. It's not the time to be trading the US dollar, Japanese yen. Okay, so just sit back and watch as things unfold. Okay, last but not least is the key. Oh, and I forgot. US dollar, Japanese yen. And retail traders are like 50-50. They don't know what the heck is going on. Okay? Yeah, Kiwi. All right, look. Longs coming off of aggressive territory, cooled off. Shorts, they use contract expirations. The institutions use contract expirations to offload a massive short position from 27,000. Now we're down to 8,000. So coloration of the cells, neutral. Okay, neutral. Total positions, neutral. Cooled off. They're not focused on it. So should you be focused on it? You know, the answer is no. You shouldn't be focused on it. So there's a little bit of bullishness here, yes, and we've seen the rally up, but, you know, I wouldn't be focusing too much of my attention on this one. All right, ladies and gentlemen, that's it. That is it. Big, big news. Sit tight. This is going to be a big year, a huge year, I think. A lot of moves. The markets are primed to make some serious moves. We did extremely well in 2022. We suspect nothing else is going to be different in 2023. We suspect the portfolio is gonna do extremely well. We're going to definitely outperform the S&P, and so many opportunities are brewing. So if you want to come and join us and learn and take part in what we are doing, please, whiteoakfx.com. Join us and have a look around. Join our classes and become a student of ours. All right. Enjoy the rest of your day. We'll talk to you later. Have a good one. Bye.